The first week is really just introduction, so nothing too heavy here. I'm going to pull up our class. And I know some of you might be aware, some of the classes now have migrated to Brightspace, and some of the classes are still on Ultra. This one is still on Ultra. So I don't know which other classes you guys are taking, but this one is still on Ultra. And hold on. I'm going to share my screen. I tell you, I do prefer Zoom. It's a lot easier to use, but here I love Rasmussen, but for some reason they like being involved with this system. So, big we must. Right. So I'm going to share my screen. And I believe it's sharing. Good. And so you'll notice that in the announcements, I give you syllabus guidance, and let's look at it together. It's a 5.5 week course. You'll be doing financial managerial accounting, the role of accountants, how to construct and interpret financial statements. The main four statements being the income statement, the balance sheet, the statement of retained earnings, and the statement of cash flow. Now, I'm going to show you in a minute. I create a number of videos to help my students. And if you go through it, you could see I created 4 short videos, not long, and an interactive spreadsheet that you could use to help you refresh on these financial statements. So I urge you to make use of it. I think you'll find it very interesting. The required materials are in the text. It's a McGraw-Hill material. You could read the text out of there by going to the additional materials. You're going to be learning about the 4 core financial statements. Later, we're going to apply vertical, horizontal, and ratio analysis, which I'll explain when we get there. It's really an analysis of the different spreadsheets and accounting and all of that. We're going to identify the purpose and elements of internal controls, which is how do we protect our business? How do we make sure there are no irregularities or people aren't, revenues aren't leaking or, we're not vulnerable. We're going to talk about cost accounting, and then eventually we're going to talk about costing and the budgeting process. It's an accelerated 5.5 week course. Plan on spending some time each week to get the work done, but I do give you plenty of guidance. So maybe that 15 to 18 hour number, depending on, how you work and how you do business, you may not be as stringent as we think. Check your course announcements. Always check them. Complete your reading assignments, and of course, you guys are already at the live classroom settings. This is the grade breakdown. We don't have any discussions here, so that's at least easier on you. And then the rest is just the prerequisites for our class. A little bit about me, I just told you, this is something that I really feel strongly about, so I'm very happy about it. And I enjoy teaching finance. I enjoy this. So this is really something that's a labor of love, and that's why I do it. And it gives me something really special to do at this stage of my life. And once you go into the content, you'll see that if you hit week 1, there's your course project information, introduction. And what you're going to find in this class, hold on a minute. Do you guys, could you guys hear that? Did you hear that?
No.
All right, let me share again. Sometimes you got to share sound over and over again. Now, this is great. We have these little videos each week, and you're going to be, okay, here we go. And you're going to be working with Alex. And Alex is a nice guy. So let's listen a little bit to Alex.
Neighborhood coffee shop, and I need your expertise to help me make smart financial decisions every step of the way. Across 6 modules, you'll guide me in planning, launching, and managing my cafe, applying accounting principles to real-world business challenges. In Module 1, you'll help me choose the right business structure, whether it's a sole proprietorship, partnership, or corporation. You'll compare the options, weigh the advantages and disadvantages, and recommend the best fit. This will give you a strong foundation in how accounting impacts business forms. In Module 2, we'll dive into my first quarter of operations. You'll record transactions and prepare the 4 key financial statements: the income statement, statement of owner's equity, balance sheet, and statement of cash flows. You'll see how transactions flow through the accounting equation and gain hands-on experience creating and interpreting financial statements. In Module 3, we'll analyze those statements using horizontal, vertical, and ratio analysis. You'll help me assess my cafe's liquidity and financial performance, giving you practical skills in financial analysis that managers use to make informed decisions. In Module 4, you'll help me understand internal controls and risk assessment. We'll explore the 5 components of internal control and see how they ensure accurate reporting, efficient operations, and compliance with regulations. Essential knowledge for any business manager. In Module 5, we'll focus on cost accounting. You'll classify costs, perform break-even analysis, and help me determine the pricing and profitability of a new cold brew coffee product. You'll gain skills in cost management and decision-making for new products. Finally, in Module 6, you'll help me create a comprehensive budget for the next year, projecting revenue, estimating costs, and calculating net income. You'll learn how to apply all the concepts we've covered to plan and manage a growing business successfully. I'm counting on your guidance to help Ground Up Cafe thrive, and along the way, you'll develop practical accounting skills that every business manager needs. Let's get started.
Okay, so that basically shows you'll be dealing with Alex over the next couple of weeks. The first week's assignment, you're going to have to go over the different accounting and business forms. So for many of you, when you start a business, you have to set your business up. And the business is either going to be a couple of forms: sole proprietorship, which is most of the businesses you see in the world, or in your town, your local Chinese restaurant, your hair salon, the convenience store. They're basically sole proprietorships, and those profits and losses flow directly to the owner. So the owner claims it just like part of their income. Problem with that is you have unlimited liability. Now, obviously, if you're doing something that's not right or it's criminal, you can never limit your liability. And I think everyone understands that. So if you're doing something that's you're not supposed to be doing, well, that's an issue. But sometimes things happen that you didn't intend on. So for instance, a scaffold falls down through construction, someone gets hurt. That wasn't necessarily your negligence, but you could be sued. In which case you want to be protected on your liability. And that's where partnerships come in. So if you start a limited liability corporation, now partnerships are like doctors will do that, lawyers will do that, but they still have liability. But with a limited liability corporation, which I always urge my students to at least open one of those for side businesses, you can protect your non-criminal or non-negligent liability, and that you don't want that kind of getting into your personal business. And of course, the biggest is the corporation. So this is the accounting equation, which is we should realize is assets equal liabilities plus equity. So we know that whatever we own minus whatever we owe equals whatever we're worth. And that's the basics of the accounting. And equity could be either stock that's been issued by our company or stock that we authorize. And we want to remember that the U.S. accounting codes assume that everything is going on as a concern, that we're trying to make money, that we're using the dollar as our monetary unit, and that we have a specific time period, like an annual period, or we might close at the end of a quarter. We match most importantly, we're going to match our costs to our revenues. So if we have a number of different businesses, say we have a soft drink company, like Coca-Cola. Well, obviously the biggest part of Coca-Cola is Coca-Cola, but they have orange juice, they have water. The cost of those things have to be matched up with the same revenue stream. So you don't want one cost you don't want to be making one business look better than the other by matching costs effectively, because that could be, again, a real problem, and could also be a criminal problem if you're cheating your investors. And then we always want to look at cost benefits and deal with anything that's material. And you can play with this and get a good idea, and I'm going to leave that to you to match those up. Now, here's your assessment. When you get to your assessment, okay, I'm giving you guidance here. So you can go to the guidance and do I say, do you want a copy? I actually give you the memo to Alex and the guidance. You can go ahead and use it as guidance for yourself. So once again, each week you'll notice I will give you guidance. I will give you guidance each week. You could use it. I wouldn't, I don't want you to copy word for word, but I definitely want you to take advantage of it. I think it's very important, and I think you'll find it'll be very helpful for you. It'll be very helpful for you, okay? So make sure you do that, all right? I think that's really important. I can't tell you how much that might help you. And that's why I put it in there. Now, this is really important. This is my accounting playlist and spreadsheet. This is a great refresher. I give you, now if you click on this, I give you an interactive spreadsheet, okay? I give you an interactive spreadsheet. Just give me a minute. It should be calling. Bear with me. Here we go. When you download it and open it, now hopefully you could see it. Can you see my spreadsheet?
Yes.
Yes, sir.
Good.
Yes.
Now, the beauty of the spreadsheet is that you're watching my videos, and some of you, I'm sure, I would need it. Maybe not at this stage. I'm doing this long enough, but if I'm a new student, I'm going to need a little refresher. This is a great refresher, and you can click through it and look at up here, look at the formulas to see just how this thing flows through. And then here's the statement of retained earnings, here's the statement of cash flow. So here, just to get you started, let's look at, let me see which one I want to do. Let's look at the income statement together. Hold on. This is the first. Can you hear that? Let's try it again. In a series of
A little bit.
Okay, so I'll leave the captions on. Let me just make sure I'm sharing sound, and at least get you started on this. So, and then watch the rest on your own, but at least get started, because even though this isn't part of the first week's curriculum, I want you to get comfortable with it. I want you to get comfortable with this. Just give me a minute. So I'm going to share with sound. Let's give it a shot together. All right. Kind of a review of the basic accounting theory. This kind of works with finance classes. It also is very helpful if you're an accounting major. Either way, it's really helpful. As I have degrees in accounting, economics, and finance, I try to bring it all together, and I teach statistics. I try to get it all together and present it in one format. So I've created this fictional company, Tom's River Corp, and there'll be 3 or 4 parts to this series, because I want to start with the income statement. Then we'll do the balance sheet, retained earnings, statement of cash flows, and an overview. But if we look at, let's focus, and this is an interactive spreadsheet, and that's why I created it, because by using it, you get an idea of how how these statements should actually flow. So we see that on the income statement, and every company has an income statement, whether it's a small mom and pop business or it's the Coca-Cola Corporation or the International Business Machines Corporation. Either way, you are going to see an income statement. We'll get into the balance sheet in the next video. But here we have sales of, well, it's all in thousands, and you always want to watch out for that too when you're studying. So this is in thousands. So the sales for this company would be approximately $3,074,000. And if we take out the cost of goods sold, and watch up here, because that's, for those of you who have a good knowledge of Excel, you'll appreciate this. And if you don't, this is a chance for you to start to begin learning Excel. The cost of goods sold in this issue is $2,088,000. So when you subtract what it costs the raw materials to create these sales, and this is obviously something like a manufacturing company, service companies, finance companies are going to look a little different. And obviously that's why you have to keep studying to learn the different nuances. But at the end of the day, it all looks the same. So gross profits are 986,000, and notice up here, I subtracted sales from cost of goods sold. Now we take out our operating expenses. So selling expenses would basically be commissions, what you pay salespeople. Maybe you outsourced your sales. However that worked, the accountant would plug this into selling expense. Administrative expenses would obviously be legal, accounting, overall administration of the firm. And the reason why we break these out is we want to see what our profit margin is versus what our raw material cost is. And not just, and we're going to learn this in further videos, when we look at ratio analysis, we don't just compare our cost of goods sold on an absolute basis. We look at it relative to other companies within the industry. So for instance, in some industries, cost of goods sold might naturally be very high, and the company makes money on financing or different things. Here, in this particular industry, and we just made up this industry, we hope that this ratio of 986 to 3074 is commensurate with the other companies within the industry and makes sense for that industry. And if it changes or varies by much, we're going to want to ask that question. So these numbers kind of are included where you start asking questions. Another expense might be the leases that we have on automobiles, on different copiers, things like that. And then a very important number is depreciation, which I'm going to spend some time in a different video on depreciation because it's such an important part of the of understanding finance. But basically and quickly, the government urges us to start businesses and create businesses because when we create businesses, we create work, we increase the GDP, and we have more people who are out in the workforce paying taxes. And that's going to be another video. But what happens is when you build a building, when you do anything of a capital expenditure, a building, a truck, anything you buy, the government allows you to write it down against your earnings. So it becomes a non-cash expense because you've already spent the money, but you're able to deduct it from your earnings so you pay less taxes. So again, this is a video for another time, but to some, it's like your mortgage. You don't actually pay the entire mortgage. You're paying the mortgage less the amount you deduct from your taxes. So depreciation is a way for the government to encourage us to invest in different things. So we get to deduct it from our taxes, and that becomes part of our expenses. And notice that our operating profits are now going to be the gross profits minus the operating expenses. So we have operating profits of 418, which was reduced by the depreciation. So then we take out our interest expense, and then we have our profit before taxes. And again, if you look up here, you'll see that helpful formula for how I did the Excel. So now the taxes actually come out of, the taxes, in this case, I just plugged in a number because I didn't use a percentage, but they're a percentage of our net profit pre-tax. And if you do 924 divided by 325, you're going to get that number. But notice that tax number, the pre-tax number, the number we generate, the number that generates our tax liability is inclusive of this depreciation number. So you see how if we didn't have depreciation, this number would be higher and we would pay more taxes. So the government is effectively picking up, if you do the math, and again, I can't say this enough, we'll do this in another video, the government is effectively picking up our tax rate because they're reducing our taxes. So afterwards, and we're the government, net profit post-tax will come out of these two numbers. And then any dividends we have to pay, preferred dividends, which is another subject, what a preferred stock is. It's basically debt. You know, it's not really equity. It comes on the equity side of the sheet and it helps banks and firms that need to show more equity. But at the end of the day, it's debt. It's like a debt. It's like a perpetual debt, but it is preferred. So we have to pay that dividend, and then that's the earnings that are available for our shareholders. In this case, we have 76,262,000 shares outstanding. And when you divide your earnings by your shares outstanding, you get that all-important EPS number. Again, another important metric. EPS is the way we could look at how much our shares are earning. For instance, if this stock was a $29 stock, our EPS would be earning 10% of the our earnings would be, our stock would be generating 10% of its value in earnings. And that would be our return on equity, so to speak. But there's more to that, and that's got to be another. This is more of an accounting treatise, but there's going to be more that I'm going to do in terms of EPS. That's important for me to explain to you. I'm going to put this under the finance academy, and I'm gonna create an accounting academy, so you have both for my students, okay? I'm just writing it down, so remember to do that. And then finally, we have the dividends we pay, which is, the board of directors and the chairman decide how much they want to pay. And it's a function of what they think they're, again, the client. Let me stop sharing for a minute. But bottom line is these videos, and again, some of you are already maybe very comfortable with accounting, fine. Just then then just dive right in and start doing the assignment, which the first week's assignment is just not that difficult. It's really just about the four business models. Do you want to start as a corporation? Probably not. Corporations are generally reserved for big companies. That's the benefit you get from growing your business. Of course, corporations are highly regulated because people are buying stock in your company and the government has to make sure that you're doing everything correctly. Most companies are going to be sole proprietorships, but like I said, I highly recommend a limited liability company. And again, the key word for this first week is going to be summer. The key word is going to be summer. But I'm going to give you guidance each week. And then each week, you're going to get an assessment where you have to listen to Alex, my good friend. So let's listen to Alex one more time. He's going to tell you about the first week's assessment. I've already given you the assignment. One thing I want to caution you on is on many of the assignments, sometimes you might have to do an Excel spreadsheet and a memo. Make sure you deposit both to get full credit. This first week, you just have to give me the information on a chart giving me the different business models that you would use, and then a memo to Alex as to how to do it. So this week is pretty simple, but going forward, if you have to do both, and you will have to do both, make sure you give me both, because without that, you're not going to get full credit. And I don't want to do that. I hate taking credit away from students. So like, for instance, the next couple of weeks, you might have some accounting work to do. And if we will give you a spreadsheet to work with, template, and I will guide you through that. But if it's that plus a memo, you have to give me both. And let's listen to Alex one more time.
Hi again, it's Alex from Ground Up Cafe. I've got a big decision to make before I can open the doors. I need to figure out what type of business structure is best for my cafe. Should I be a sole proprietor, bring in a partner, or set up as a corporation? Each option comes with different responsibilities when it comes to liability, taxes, and even how I can raise money if I want to grow. That's where I need your help. And explain how accounting information is used differently depending on the structure. Then give me your recommendation for the best option for Ground Up Cafe and tell me why. I'm counting on your accounting expertise to help me start off on the right foot.
Right. So it's a difficult week, the first week. It's not. Friends at home, summer. I would suggest watching my videos and looking at that interactive spreadsheet, only because it just makes everything, it just refreshes everything. Now, if you're already working as an accountant and you know this stuff, or you've got an accounting degree or whatever, well, then, you have to manage, your own work. And I'm not telling you, there's none of this as a prerequisite. This is just information I'm offering to make it, as easy as possible for you. But if you feel like, hey, I didn't take accounting in a while, or I'd love a refresher, you saw that first video, and that's one of the bigger ones, 8 minutes, 7 minutes, 6 minutes. Then you could use my interactive spreadsheet and play with it a little bit. And now the other things become easier. That's basically it for the first week. Any questions from Ronald, Tammy? I see I have Angela here and Shantea. Any questions?
I know that what you call it has your syllabus has due dates. When is everything due? On Sunday or before next
Yeah,
class?
it's Sunday generally, and generally what I do is I'll grade it on Mondays. I try to get it done on Mondays. And if
Perfect.
you need a little extra time, let me know. But I prefer it gets it done on time, obviously. But if you need a little extra time on a particular week, I could give you a little extra time. Okay, does that make sense? Ronald?
Yes, sir.
All right, great. I will tell you, I've done a lot of business, my professional life, and I've been to Chicago, and I'm a huge, now pizza, I'm a New York guy, obviously, but I like the Chicago pizza, but Chicago beef to me is the best. The best. I love that.
Good morning. This is Angela, and
Shane.
I apologize for being late because I was in a
Oh.
meeting, and so I was trying to get out of, but you know how work does. I'm just taking an early lunch. I guess I'll go back and look at the recording,
Sure.
because I have no accounting experience at all. So this is totally new to me completely. So I just want to make sure you did give like the keyword. Did you say it was summer? The
Summer.
keyword? Okay. I wanted to make sure that and also you said that all assignments are due on Sunday, correct?
Right.
By midnight?
Sunday
Okay.
midnight, right.
Okay.
But again, I take, when I start these classes, I know I have adult learners, and that's why I make these videos. Because I assume that most of you folks that's why you're here. You want to learn the accounting statements and everything else. So watch those videos. They will absolutely help you, Angela.
Okay, so
And
I'll look at those first before I reach out, but I'm pretty sure I'm gonna be reaching out.
It's okay. You'll be fine. I promise. I've been doing this a long time, and you're no different than everybody else in the sense that that's what it means to get back into the mix, and it's admirable. I know you're adult learners. It's not the easiest thing, but believe me, I'll make it as easy as possible for you.
Well, I greatly appreciate it. Thank you so much, because I was like, oh gosh, I'm gonna feel so slow. I'll be the one asking 101 questions, but at least you'll know that I will be active. So I'm letting you know I will be asking 101 questions.
No, no, no. I'm a New York guy, but one thing you learn about New York people, we got a big heart deep down. We just have to deal with all the characters that we have to deal with in New York, but we got a big heart.
Okay,
All right.
thank you.
Angela, it's not just you. I have no expertise whatsoever in accounting, to the
It's
point
okay.
Thank
where
you,
I made
Tammy.
friends with some of the people in the accounting team at my work just because I knew I was taking this class. I was like, I'm gonna hit you up.
No, you'll be
Thank you,
fine.
Tammy, so much. So I don't feel like I'm by myself, because I'm like, oh my gosh.
No. But believe me when I tell you, you're perfectly normal here, perfectly normal. And that's why I create the videos, and I'm going to be sensitive to that each week, and I will be sensitive to that when I grade, and I give you all the guidance. So now it's not because I just want to give you the answers. I want you to be able to read the answers, kind of formulate them in your own words, and by the time you're done, you're going to say, you know what, now I get it. All right, folks, enjoy the rest of the day. I'll give you back
Thank
some.
you for that.
Oh, it's my pleasure. Enjoy the rest of your day. I'm going to give you back some of your day, and I'll see you guys next week. And I will send out the links. I know that the school's had some issues with Teams. I'm going to double check what they want us to do, but you will have my links. So I'm so happy that you got here. Now, I will be saving this recording on YouTube because I know that could be difficult, and then I will post a YouTube link so you could watch this YouTube.
Okay, one more quick
Okay,
question,
sure.
because I know that was a book. So do we need to go to the book, or you're going
You
to
know,
put? Okay,
absolutely. It's a McGraw-Hill book. Go to the McGraw-Hill site, read, go through your chapters, read the chapters. That's only going to make things easier for you. And you could find that, let me see. Here, Alex, give Alex a break here. So when you go here, close this for a minute. And again, a lot of these classes are migrating. It's going to be a little easier navigation. A lot of classes are migrating onto Brightspace, but this is still on Ultra. Go to Books and Tools, and you should be able to find your book. No, I know where you find it. That's for me. For you, you're going to go to Content, go down to, should be here, Course Materials. Oh, and there's your textbook. Let's click on the textbook. And it's a great textbook. So you'll get a lot of help out of it. McGraw-Hill does a good job. And you could start reading from here. Okay? You know, I don't have a student progress here. That's why you're not seeing it. I'm looking at it from my standpoint. You should be able to find your textbook right there. Okay. All right. Any other
Okay.
questions?
I just want to say thank you so much,
It's my
and I
pleasure.
look forward to going on with you. Thank
Just-
you.
It's my pleasure. That's why I'm here. I'm here to make your life easier, not harder. But just one thing, here's the course materials, and then just launch the ebook. That's all you're responsible. There are no assignments here. You just have to launch the ebook. And once you launch the ebook, it's really a nice thing to use because you can pan through it. You could listen to it, you can make marks, it's really, they do a good job with this, you know, and then you'll see like accounting, and you can go to different parts of the book if you want to get down to a specific thing, okay? All right, folks, we'll see each other next week. Be well and God bless all of you.
Thank
Good
you.
night.
Take
Have a
care.
good day, everyone.
Take care.
You too. Thank you so much.